Welcome to Brave. Be inspired by the best leaders of Southeast Asia tech. Build the future, learn from our past, and stay human in between. I'm Jeremy Au, a VC, founder, and father. Join us for transcripts, analysis, and community at www.jeremyau.com. Hey, Mao, good to have you on the show.
Thanks, Jeremy. Excited to be here.
Yeah, well, really excited because it's a small world in Singapore. I've heard great things about you via funding societies, but also happens that, my sister works with you. And so it's nice that, we're just kind of like, practically family, I guess, at this rate.
Wonderful. Yeah, that's great. Yeah, happy to share.
So, for those who don't know you yet, why are you awesome and what have you done?
So a little bit about background on myself. Well, when I was a lot younger, I was in the quantitative space. In Wall Street, they would call us Quant. So I was running through a long-short market-neutral fund. We're managing 100 million long, 100 million short portfolio. It was a very small team. We were in Barclays, and then subsequently we moved on to a prop trading firm in Chicago. We were very hands-on. It runs end-to-end, right? It spans from research to implementation to coding up the order management systems, fixed messages, operational stuff, and all. And it was very quantitative. It was a geek's heaven, if you will, right? Then from really hardcore research in the market inefficiencies to really developing the algos and the strategies that will trade the market. So you get a lot of satisfaction from there. So that's when I was quant in the States. So I spent about 10 years there. And then subsequently, I came back to Singapore with family. And then I ventured into the startup space. So as a quant trader in the States, we invested, bonuses were good, and we invested in properties personally, right? Properties as well as startups. And back in Singapore, I joined startups as well. That was in late 2015. The quantitative space was not very developed in Singapore. So startups was the next best option, from where I came from. And so I started with Paktor, joined them to run the data team. It was up and coming, it was like Tinder. And then subsequently, a year later, I wanted to found my own startup, QVantage. But along the way, I was consulting with several other startups, some VC firms as well. And I was helping this startup called Funding Societies. We chatted for maybe 2-3 months. And then subsequently, I joined them full time. It was a very promising startup. It was like Lending Club, Prosper.com in the States. And then so I joined them. Yeah. And then I spent maybe 2.5 years with Funding Societies. We scaled the team. When I joined them, the founders were still in school. It was a small 20-man team. The technology was from a contractor. So I joined them and I took over the technology side. At that point in time, it was, every crowdfund that we do in Funding Society was very unstable. There were a lot of crashes and stuff. The volume was huge. There was a lot of demand. Online investing was the next wave. And when we put up a deal on the platform at that point in time in 2016, early 16, things just was quite a mess. So I joined them. We started hiring up on the back end, front end engineers. We also developed mobile apps, the product infrastructure, and so on and so forth. We installed sprints, technology sprints, processes, and then migrated from the monolithic architecture we had to microservices architecture. We went through the MES. We were licensed in 3 countries. And then we went through the MES, the TRF frameworks, the tech audits. And in Indonesia, I also certified, ISO 27001 certified for the OJK license. We set up data analytics, engineering, science teams as well. And then just before I left, we were on to cybersecurity. We also installed a cybersecurity team. We did a lot of hacking. There were a lot of security attempts. None of them succeeded, but we also saw the need to be more beefed up on the cybersecurity front as well. So it was a fun company. We drove it. It became something that was pretty large. When I joined them, was pre-Series A, just after their seed round, pre-Series A. And then when I left, they closed their B round and then moving on to raising the C round. Yeah, so it was good. When I was there, we were also driving technology products on the micro lending side. because after all the technology components were sorted out, the people were in place, the processes were laid out, then we could, as a senior executive, we can start to solve other problems. There was a technology product that we were driving that was looking to drive more revenue, more profits. And then I started to take on other problem areas in the firm that I could solve as well. Because it's not just technology that makes the firm great, it's many other parts to it. So, so you look to value add in many other ways. There were many gaps in the firm, right? So that's the journey at Funding Societies. And then subsequently, I left and then formed RealVantage with my co-founder, Keith. Keith is from the property investment side. He was, doing property investments his whole career, 20 plus years of experience, deploying capital across the various countries into large office buildings, into large retail outlets, residentials and stuff. So very experienced property investment specialist. After a lot of chats and drinks and stuff, we decided to take the plunge and build this. It's the next way forward from what we see. It's online investing is something that's coming up that is folks are very familiar with, and then this is a new asset class where Southeast Asian citizens are all very excited about. Yeah, so that's why we put together RealVantage and hope to serve the population in this space.
Wow, what an amazing journey. And I have so many questions, right?
Sure.
This is an interesting life that you have had. Obviously the first one is obviously, at least in business school, in the MBA, etc., people use the word, quants, and everyone's like, wow, like these samurai who are, roaming the financial data internet and making trades and, all these normal value investors, these hold and long-term value. No, these quants are the guys who are making the real bucks, right? So that was the story, right? And so all of us were like, why are we even in this room learning fundamental financial strategy when the quants seem to be, doing stuff, making collateral, making securities, making plays? Felt like, playing defense, while the quants were like the wonderful, rock star strikers, right, out there. So what was it like? I'm sure that was the outside in but what was it like being a quant in the States?
I guess the grass is always greener on the other side. I think there's always room for multiple players. There's for whether it's the value investors and all. I do believe in value investing as well. But from the quant perspective, it's largely statistical, right? So you look at research, or rather you conduct your own research into the market data, and then you find different inefficiencies which you can potentially look to make the markets more efficient with. And of course, there are challenges, in the quantitative space. You do researches; it takes quite some time. After everything is done up. You find a strategy that looks like it's going to be working, right? So you do your back tests, it looks great. You perform your simulations on live data feeds. Wow, it's awesome. And then you turn it on to production with a small stake. And then, whereas in simulation, it keeps going up, in production, it keeps going down, profit and loss wise. So and then you scratch your head and you puzzle, and then you go back to your research, what's wrong, compare and contrast. And you find, you're slower than the market. You're slower than, everybody has moved, but you haven't moved yet, right? So you need to be co-located. Your servers need to be closer. And then there's additional cost involved. You have to bake it in, compute, okay, maybe it works. And you try it again, and then it fails, and then you try it again. So it's a lot of trial and error. It's a lot of experimentation. It's fun, but there's some frustration. It's also stressful because, when let's say your models, in all your different metrics, that it's going to work over time. This is your information ratio. This is your Sharpe ratio. It's going to be, let's say, 4x, right? 4.0, right? And then when you actually run it, the day-to-day movements actually makes you nervous, right? For example, let's say after 3 days, it's a down. It goes down for 3 days. Okay, sure. That's expected. It's part of the model predictions. It goes on for 5 days. It goes on for 7 days. Is there something wrong with the model? Let me check. After it goes on for 10 days and 15 days, okay, something's off. Let me check it out more. So there's a lot of stress involved. But more often than not, the models are performing properly, right? It's the human emotions that get into the way, the fear. Then you start to scale down a bit. Maybe I should do this better. So trust the machines, right? So from my perspective, that's something. Yeah, so there's good sides and bad sides. Yeah, I just shed a bit more color, so that you get a bit more appreciation on the quantitative side of things, I guess.
And so what's it like in a normal day to day of a quant? Is it like, you wake up in the morning, you read research papers, you do a bunch of meetings? What's it like actually on a day to day basis?
Okay, we don't really go for a lot of meetings, to be honest. There's a lot of research, a lot of data cleaning, testing, some discussions, and then a lot more on the life revolves around markets, models, research, performance. Right, you want to make sure that all your algos are performing out there, or rather, all your strategies are performing out there, and you keep abreast with the markets, and you get a lot more insights into the data by doing more research, not by doing more meetings. Yeah, so it's pretty much a very geeky environment, I would say.
So it wasn't too different from like the DSO time and like, your time as a master's in computing? Was it did you feel very similar, like that academic research dynamic, and then just adding on the real life component of it?
Adding on the real life component, adding on the stress component, adding on the component that there is a 100 by 100 million long, 100 million short portfolio, at stake. So, I mean, 100 million by 100 million is small compared to the regular, value funds where they manage tens of billions or hundreds of billions, right? So, capacity is smaller in a quantitative firm. And yeah, I mean, but to answer your question, yes, it's to some aspects it's similar to the research days, but there's a lot more urgency. There's a lot more performance required as a quant.
So there you are, 8 years, in the States, so from Singapore to States, 8 years in the States, being that, Ronin capital, samurai quant there.
Okay.
And then you add on 2 more years in the SFB area. And so why is it that you decided to, firstly, move back to Singapore?
So it was family. I had 3 children when I was there, from the first to the last. Just after my third child came off, it was we decided to come back to Singapore. So the last child was quite premature at birth, so we had to move back to Singapore for I don't know. I mean, extended family help, I would say.
Yeah, that makes a lot of sense. I mean, that's where family is really powerful in helping raise a family, right?
Yes.
So there you are back in Singapore, and you built 10 years of deep experience as a financial quant. And then, like you said, you somehow make a jump to startups, and not any other startup, not a fintech startup. You join Paktor, right? Which is the dating app, right? So I got to hear this story, right? So you're doing financial quant algorithms, and now you're doing human dating algorithms, right? So how does that happen? Yeah.
It was actually quite a big leap, and I was thinking quite a lot before I made the switch, right? And it required a lot of thought to it before you make the leap. Actually, before anything I do, I do think quite a bit before I push through it. So when I joined Paktor, it was as a role on the data side where you run the data team, and as a quant. I think at that point in time, this term called data science came fashionable, right? Previously, it was essentially statistics with computer science or statistics with programming. But at that point in time, data science was something that was fashionable. I joined them largely for a few aspects. Right? When you in the States, you see a lot of different startups that grew exponentially. And as a quant professional, you also keep abreast with the different investments that's going on. Like I mentioned earlier, I invest into startups, and when I made the switch, it looked like Paktor was also going the way of Tinder. They serve the market need, and there was this role where I could add a lot of value to the firm. There was a lot of data that was being collected, and you could make a lot of sense from it. And so I joined them. Essentially, there were a lot of things that were built when I was there, from analytics, the dashboards. You look at the product side and you see how data can help. You look at the marketing side and you see how data can help. On the product side, I think one very interesting finding was that there is an autocorrelation to swipe activity. The probability of, or rather the conditional probability of, the next swipe being the same as before gets higher as you swipe. So whether it's to the left, then the probability gets higher, or you go to the right and the probability that the next swipe is at right is higher than before. So you can make use of that information and try to tune your product to improve it, right? I'll leave you to imagination how you can do it. I won't share more there. On the marketing side, you look at data from digital marketing, and you can see how to make sense of it, and essentially how to drive ROI for marketing in a better way. You measure your CACs, you measure your LTVs, you measure your funnel conversions across the whole marketing funnel, across your different campaigns. You test across your different creatives or copywriting and see which one is really resonating, and then you move from there. And if there's a spike in your user activity, whether it's your DAU or your MAU, or your engagements, you can correlate that with, let's say, something that's done, right? Whether it's a product launch, whether it's a feature launch in a product, or whether is it email blast that you go out, or is it a PR that was sent out, or is it another campaign that was just pushed out. So you can correlate these different matrices with what you actually push out on the marketing side, and to see which one is really performing, right? Yeah, so in short, I mean, it's you can put a lot of quant or rather quantitativeness or a lot of study or analytics into a regular startup that is a good volume. Right? So I mean, essentially, that's where I came from. Yeah.
Wow, that's an amazing story. I mean, and it's not a common one, right? I mean, OkCupid was one of the first few people to really put together that data science dynamic to human dating, which obviously I think before that had all been like, grandmother stories or, broy slash, comrade stories about what works, what doesn't work. And it's interesting that he did that. I remember, his quantitative eye with their blog, right, on data science. And actually, for us, Peng at, the founder of Monks Hill, used to be one of the leaders and co-founders of Match.com, and also takes the same quantitative point of view on, the human dating side of it, right? So very interesting times for everybody.
Mm-hmm. Yeah, that's true.
So there you are, you're quant, and you've been ironing out the inefficiencies of the financial markets, right? And then now you're like working with people, right, who are dating, right? So you're looking at the efficiencies and the inefficiencies of the market. What parallels did you see between, both markets from your perspective?
I think, as a quant versus as a data professional running the team, for me, I found that I got to interact a lot more with people across multiple teams, right? So previously as a quant, you don't need to worry about the sales, you don't need to worry about, let's say, business development, or which you focus on performance, models, research, performance, markets. Whereas, as a senior exec running the data side, you look at many other things. You get a lot of interaction with the marketing team, you get a lot of interaction with the product team, and then you have to manage the data part of things, right? From the infrastructure all the way down to the dashboards to all the minute detail as well. So that's where I would say the biggest difference would lie as a quant versus as a startup exec, looking at the data side.
Yeah, and there you were, chief data scientist, right? And then you decided to make a move, right? From there as well. And this time you eventually transitioned back to something that was much more finance oriented in some ways, right? So kind of like both a combination of both sides, right? Which is the human psychology dating side, but as a startup operator versus the fintech and the quant, and you became eventually like the CTO for Funding Society. So how did you get from point A to point B here?
So, like I mentioned earlier in the very brief discussion, it was a move where I was speaking to the founders more over WhatsApp for quite some time. I think 2 to 3 months before I actually made the move. Before actually, after the Paktor, I was looking to start my own startup. Putting, after all the mobile experience from Paktor side and the digital marketing experience in scale, I wanted to move some of the models that I had, or some of the strats or algos that we had as quants, and then move it to the public domain. So that was actually the idea for QVantage, which I wanted to do. But along the way, I was consulting with other startups, and Funding Societies was one of them. And after 2 months of discussions with the founders, I decided, yeah, this looks like a startup that does have the legs to run, and needs somebody to look into this whole technology side on their end. And what I was looking to do as on QVantage, where to put the models into the hands of the public, that one I could still do later down the road. But for P2P lending, that was the time that it has to be now or never, right? So that's why I took the plunge.
Yeah, amazing. And there you are working with Kelvin and Reynolds, who are both like Harvard MBA classmates of mine. I
Oh,
remember chatting
thanks.
with them at HBS about their return back to Southeast Asia and their plot to build out funding societies. And so there you are as the CTO. So there you are, you've been a quant, then you become chief data scientist, and now you're becoming the CTO, right? So what was that professional journey like? Because, you can see that a very intentional building from my side, like in your eye, of building up skill set on skill set, right? But what was it like transitioning to become a CTO?
So you look at many different things. I think first and foremost, I think when I first joined, there were a lot of crashes, a lot of downtime on the site. So you look to put a stop to that, which we quickly did, and then subsequently look to bring on other members of the team, so team leads for backend, for front end, and then for mobile as well, for product, and to get the platform or to get the technology stack into a safer place, into a place where it's more stable, more reliable, more scalable. So that was the first part. And then subsequently, we started to bring on data analytics, data engineering, data science to make sense of the data. And then following that was QA and cybersecurity. So that's what, on the technology side, in terms of stuffing up, that's what happened actually. And then on the processor side, we moved into sprints, right? From 2 weekly sprints, we had more processors installed. And then, as mentioned earlier, it was going through the MES, the technology risk framework, the tech audits, the ISO certifications, and so on and so forth. And then driving technology products subsequently. Yeah, so that was a fun journey, I would say.
Did you feel it was tough, like transitioning to become a role? Because each, stage, you're taking on more and more leadership, right, roles, managing more people. You're also taking on different things, right? Because as a quant, it's not the same as a data scientist, and then it's not the same as being a CTO. So how did you go about learning the skills? Did you ask your friends, or did you read a lot of books? I'm just kind of curious there.
I think humans are very adaptable. You learn as you go along. The learning curve has always been, I would say, moderate, in my opinion. You build on what you have before. You put a lot of more thought and thinking into it, and then you try to anticipate different problems that could come up. You anticipate what the firm or what the different processes that you would need and the staffing requirements that you have, and you work with the budget that you have, right? And then you devise a plan and you go from there, right? So from strategy to execution. So I wouldn't say it was. I mean, I'm like that. As always, it's a gig. As a gig, you think a lot, right? And then you so that's how I've been approaching two things. Of course, I read as well. There are a lot of reading material that one goes through. Paul Graham's notes has always been very helpful, even today, right? In my own startup, I read that as well. Yeah, and as well as different books like, for example, Phil Knight's Shoe Dog and stuff like that. I hope that answers the question.
Yeah, it does. I mean, it's good, right? Because, I think a lot of people go through that, role expansion, right? And building up, and they're often asking themselves, like, what do they need to read or learn to get there, right? Because, not everybody gets to progress from the data side to the, CTO side, right? Both in terms of vertical in some ways, but also in terms of role progression.
Just to add a little bit more, right? So my background was in software engineering, right in the as an undergrad, and that's where you pick up everything from on the computer science side of things, from databases to operating systems to network and so on and so forth. So that has always been my first, something to rely on. So you can engage engineers easily because you are speaking the same language, and as well as the management skills on the role that you pick up. So it all falls into place as well.
No, yeah, that makes a lot of sense. And so there you are. And then this time around, you're like, okay, I tried to found a company once and I decided, I'm going to go and become CTO of funding societies. But now this time I'm going to found for real a second time around, right, with RealVantage. So what was so appealing about the problem that said, I must work with this co-founder and I want to tackle this problem?
So RealVantage is a co-investment platform for real estate. And essentially what RealVantage does is that it offers for investors, for real estate investors, a place to get access to institutional grade deals. Right? So investors get to choose the deals that they are interested in. They get diversification of their real estate portfolio, and it's always smaller quantum sums. Essentially, when investors or real estate investors, let's say yourself, when you want to invest in real estate, typically you would choose the general population would choose, let's say, an apartment building, apartment unit in Singapore, right? And then put in $1 million with some leverage, and then you try to make back your returns. The yields in Singapore are very low. Sometimes you may not even have enough to cover the interest payments to the banks. So that's the access that the usual folks would get. But in RealVantage, what we do is that there are many ways to invest in real estate, right? So there are institutional professionals that invest on behalf of institutions into real estate. And these are folks that does it professionally for a living. And what RealVantage seeks to do is to bring these expertise into the hands of the public. So you get, so as a investor into RealVantage, you get access to very good deals. All of them are tightly screened, institutional quality. Just like how California Pension would have those deals. Now it's in the hands of everybody. You get access to good deals. You get to do the diversification into strategies, real estate sectors, whether it's retail, industrial, commercial, and you also get to invest in different markets, different countries, different sub-markets as well. So we are in Australia, we are in the States, we have our deal right now in UK as well as Singapore. We just did a suburban mall in Singapore, in Bukit Batok, where we co-invested with other family offices, and we provided this access to the accredited investors in Singapore. So that's what I see as very compelling. It's a product that I love. Personally, I invest in every deal. So co-founders co-invest into every deal that comes along in the platform. It's skin in the game. It's also assurance to the investors that we are aligned with, the product. We're aligned with everyone, and that we believe in each of the different deals that come along as well. Yeah. So I mean, to me, as an investor into a product, into a platform like this, it's great, right? So it's a product that I personally love as well.
So what's so broken about the current approach that, retail investors look at, property, right? I mean, can't they just buy a house? Can't they just go get a REIT, and get exposure that way? So, like what's going wrong that, we need, RealVantage to come in and
Retail investors definitely could, purchase, apartment units or buy a house and stuff like that. Totally, right? But there's a lot of concentration risk. You're putting a lot of capital into an asset that has capital appreciation or depreciation. It could go either way. And you are very much exposed into one particular market. Diversification is very important. And you can actually make your money work harder as well if you get access to some very good deals. Whether it's, there could be deals like development type deals in some sub-markets where the IRR could go up to north of 20%. There are also deals where it's a lot more lower risk, where you get into an asset that is more stable, with the tenants generate with after leverage and computations, net of fees, net of tax, you're getting circa 7+%, 8+% year on year in terms of cash on cash returns. So you get access to these different deals, which typically you will never get access to, or if you could get access, typically you have to put in a huge amount of capital. You deploy a lot of capital, in the millions or tens of millions before you get access to these deals. So that's the value add that RealVantage would bring to the users. You mentioned something about REITs, right? So what's wrong with REITs? There's nothing wrong with REITs, and it's great. REITs play a part in an investor's portfolio as well. But for REITs, you're typically investing in a pool of assets that's already purchased, and you get the stable DPUs, right, the distribution per unit. And it's rough circa, depending on the REITs that you get into, is from 3% to 7% or 8% for the more risky ones. So first, you don't get to pick and choose your own asset. You don't get in terms of strategy wise, you don't get to choose. Let's say I'm a higher risk appetite person where I want to invest more into development deals to get a lot higher IRRs. As an individual investing into REITs, I wouldn't get that exposure. Um, Leverage ratios are also different. REITs are regulated, and the exposure to, or rather, the leverage is there's a cap to it at 55%. For individual deals that you get into for RealVantage, the leverage could go even higher to 60, 65, sometimes 70%. Yeah, so there are many differences between REITs and co-investment. And we also highlight that in an article that we have. It's a common question that investors ask. So we have it in a blog article in the platform, www.realvantage.co. Sorry, I hope that answers your question. Yeah.
Yeah. So, okay. So what I'm hearing is you're basically giving, kind of like more investors the strategies that would only be available to very large institutions. And so you're effectively giving them, better return for an equivalent amount of risk, which is,
Correct.
and so it's really about that being slightly better on the curve. Is that a fair statement?
Yes. Yes. Get access and get better risk-adjusted returns.
And how does your time, kind of like being a quant and, your prior, startup experiences feed into the way that you're building the company today?
As a founder, you get involved into many things in the firm, right? And you address and you see different bottlenecks that comes up, and then you try to address it before it appears. So the experiences, I think from day one, from the software engineering training back in school, all the way until the most recent experience, all these parts would play a role in terms of shaping your thoughts, your attitude, your beliefs, right? By and large, I think a few key points that always holds true, right? The first is to be humble and then to learn from the different experiences. You don't know everything. There's a lot of things that a person doesn't know. So there's a lot of learning to be had. So that's one. And then the second part is really to test. You have different assumptions in your head, and you want to test to make sure that the assumptions that your hypothesis is true before you push further to the different, whether it's a marketing test, whether it's a product test or feature test and whatnot. So those are different parts which has always been helpful in my different parts of the career, even as a co-founder as well.
Is co-founder life what you thought it was going to be? Because before that, you had been, a chief data scientist watching the founder. You had been a CTO watching the founder. Is founder life the way that you thought expected it to be, or how is it different from what you initially thought it was going to be like?
It's very much the same, if you ask me. So I wouldn't say watching the founder in the previous roles. So let's say in funding societies, right? You do what you can to make the company grow. There's bottlenecks on the technology side when I first came in, and then you resolve those, right? And then you fix the problems. It's really problem solving along the way. You see different problems, you address it, and then you solve the problems. And then you think ahead and see what other problems could come up, and then you solve those as well. And like I mentioned earlier, this isn't just stop at technology. It's many other parts of the firm, from the marketing side to processes to sales to so on and so forth, that you can as a senior exec you look to solve. And likewise, as a co-founder in the firm, you solve different problems that come along your way. Technology was quite quickly sorted out in that sense, because I had some friends who could assist a lot on the technology side. So once the sprints, the processes, the specifications were sorted out, and once the initial platform was built, and the features were able to be rolled out in a very consistent manner, then as a co-founder, you start to look at different other problems, right? Staffing, or let's say on the investor side, there's a bottleneck. Okay, let's look to solve the problem. Or let's say on different parts of the marketing funnel, you see that you can improve this conversion, you can install these processes. There's many things to do as a co-founder, and you just do your best to solve the different problems along the way. Likewise, as a senior management in the other firms as well, it's the same thing. You give your best in any role that you are in, and then you problem solve.
So your span is larger as a result now, right? Because now you're not just doing the technical leadership, but you're also doing the staffing, the investor relations. How do you feel about all those new responsibilities? Do you feel like I mean, I guess I'm kind of curious. How do you approach it? Do you use your IQ to tackle EQ problems? Like staffing and all that stuff, or how do you think about your leadership style now that you're kind of like managing the whole company, right? From the business functions to the internal to the investor relation functions, as well as the technical leadership that you've already mastered over the years.
There's operational and marketing work that I have some overview on. In terms of staffing or managing people, my approach has always been that of you have to empathize with what the other person is, what he's doing, what is going on in his background, whether it's family issues that come to work or whatnot, right? And then you help him compartmentalize, and you try to help him perform. EQ definitely plays a part, not just the IQ side. So I mean, it's a blend of both, and it's really a case by case basis in terms of if you have workers with different issues. But by and large, the team is a small lean one when everybody is performing pretty well, and it's very clear when somebody doesn't perform in the team. There's a lot of logic to it as well. Of course, if you lead a team just purely on emotions, it's going to be a mess. So it's performance driven. It is a high performing team. A lot of accountability. Processes that govern our work. So it's quite clear.
Yeah, and when you think about all that you've done so far, you've kind of had a really established career, right? From Singapore and a DSO all the way to Stanford and as a quant, and then becoming a chief data scientist and CTO at two name brand Singapore startups, and now being a founder of your own. Could you share with us a time when you've been brave?
I was thinking a bit on that, right? And every time it's a brave time, right? In that sense, when I moved from let's say the quant space into Paktor, that's a brave move. When you move from funding societies into a new venture, that's a brave move. When you move from Singapore to overseas to do your studies, that's also. I mean, every move in some sense has that brave component to it. So it's there all the time, I would say.
So out of all those things, and you stack rank them, which one do you think was your bravest move?
I think trying to create a firm from nothing, right? Trying to solve a pain point for users with technology and scale. That means solving it for a large number of users. I think that's, and then taking the plunge with my co-founder. I think that's so far that has been the bravest to date, I would say. But of course, there's a recency and memory effect, so you forget things that's further on behind. But so I would say, I mean, because of recency, I would say that's the bravest one so far.
I like how you just straight away just pulled out a cognitive bias card on yourself right there.
I do that
for
quite
your
a
own
bit.
personal training. That's good. And I think for what advice would you give to people, right? So technical leaders, data scientists who are thinking about setting up their own startup and founding, what advice would you give them to think about or to have some self-awareness about as they make the decision to either transition or have made the decision and are going to transition into that founder role?
I would say think things through, right? And building a company is not easy. So it's not just the particular quantitative skill that you have, or it is a technology skill. Then it's not just a technology skill that you have, because as technologists, there's always a tendency to build platforms, to build stuff, right? But you don't really solve the problem or the pain point for the users. So one really needs to think on that front, that are you really solving a pain point? Is there really going to be a demand for the product? And then once you're certain there is, then you think about, what components do I need to make this work? And then you embark on that journey, right? So that's what I would advise fellow co-founders to be.
Yeah, that's a classic problem for everybody, right? Just technologists who just, overbuilding a solution and, overfitting, the solution to what we think is the problem and kind of being surprised it doesn't work. I'm just kind of curious, it happens all the time. And what advice do you have around how do you know if you're actually solving the problem, right? Because everybody has that problem. I hang out with founder friends. They're always like, oh, does this actually solve the problem or not? Like, what is the problem? So how do you, ignore, I guess, the biases where founders are like, oh, my solution is definitely going to solve this problem. The optimism, the overfit. Like, how do you solve for that dynamic?
I think you need to listen to your customers. You need to listen to the target audience that you are solving the problem for. So take, for instance, right, this particular feature that we launched very recently is a problem that, so investors do want to invest in foreign properties, but there is this part about foreign currency conversion, and the banks are awfully expensive. So there's always this feedback from the investors on the front that, I do want to invest, but wow, it's damn pricey. DBS charging me 1% for currency exchange itself, or another bank is charging me 1.5%, and so on and so forth. So we took note of that, and then we looked to solve the problem through an integration with Wise. And so we queued up onto the sprints, and then after it came up, the users started to use it on their own, and you get very good exchange rates. I think circa 30 bips from the spot. That's including the fees itself. So it's very, very efficient from the transaction perspective, and users love it. And they just use the feature right from the time when we launched it. So it was amazing. And that, okay, you have solved that pain point for the users, and you look at which other pain points there are to try to lower the barriers to entry, or try to make the product even better for the users, right? So that's what we do. I think that's in answer to your question.
I feel like all the non-technical people got very disappointed because they're hoping for a very technical answer, with a model or quant, and then you're just like, listen to your customers and just solve what they are screaming at you to solve, right? It was awesome. I think it's great. I mean that's the correct answer. I mean not the correct answer, but that's the real answer, right? So wrapping things up here, if you could travel back 10 years in time, right? And 10 years ago, I think you're still back in the States, still had to make a lot of your transitions into the technology world yet either. What advice would you have given to yourself back then if you had a time machine?
For 10 years ago, haven't really thought about that. But there are many things that I know today that 10 years ago I don't know. And so it's a learning process. You just have to go through it, and then you learn those parts. And in fact, even if I advise myself, I would still may want to test it out to make sure that this advice is legit before I execute on that. So so for me, I always have a mind of my own, if you will. And if the advice makes sense, of course, sure, let's do it. But I'm not sure, for what I know now versus what I know before, there are many things that are different. So, for example, people change along the way, right? That's what I learned as well. Integrity matters a lot. So you work with people with high integrity, and you try to solve a bigger problem. I think that's a bigger problem is problems for the users, and to make things work product wise for the users. Yeah, I mean, so that's the advice I would give myself.
Awesome. Well, I love it. I love the fact that you gave yourself both real advice, and you're so self-aware that you probably have trust but verified yourself. Even if it's not a time machine come in, it's like, okay, thanks for the advice, but let me just verify this and test it myself.
Like, are you sure? Are you sure? Yeah, you test it.
Yeah, are you sure? Are you Mao? Are you really me 10 years in the future? Is this advice legit? Let me back test this, right? So, obviously, thank you so much, Mal, for coming on the show. I really appreciated you really sharing, I think, three major parts of it, right? I think the first part, of course, was, your transition, into the quant life and what you actually meant, because it's such a black box for so many people in the world today, right? You only see them either in whispers or in the movies, right? And then the second is thank you so much for also sharing, I think, your transition from from the US back to Singapore, but also in parallel from finance to the dating market and the P2P funding market. And Lastly, I think I really appreciate it also. I think your role transformation, right? From a quant to a chief data scientist to CTO and now a founder. And I really appreciate your honesty, not just in the advice that you gave about what people should be aware of, but also I think the self-awareness of how you would have responded to that same advice 10 years ago, which I think is hilarious, but it's true, right? So yeah.
Okay, yeah. It was interesting. Definitely entertaining talking to you. Thanks for having me on the show, Jeremy.
Thank you for listening to Brave. If you enjoyed this podcast, please share this episode with friends and colleagues. Sign up at www.jeremyau.com to discuss this episode with other community members in our forum. Stay well and stay brave.